Welcome investors! Let's get disclosures right on out of the way. I am an individual investor. I am not a financial advisor. This should not be considered financial advice. My name is Dave and this is The Market Board. Today, let's take a look at Draftkings, stock ticker DKNG. Draftkings describes itself as a digital sports entertainment and gaming company providing users with daily fantasy sports, sports betting, and online casino opportunities, and are also involved in the design, development, and licensing of sports betting and casino gaming software. Draftkings finds itself competing with other key benchmarking adversaries, including other daily fantasy sports providers, including FanDuel, Yahoo Sports, and Monkey Knife Fight. And currently, it trades for about $43 a share with a market cap north of $16.5 billion. Before proceeding, I'd like to take this opportunity to thank all of you for watching and just to remind you to like and subscribe to stay up to date with all of my latest stock commentary videos. To understand Draftkings a little bit better, let's take a deeper look into their actual offerings. Immediately, we can notice that the business of Draftkings is separated into two distinct segments, business to consumer and business to business. Starting with business to consumer, daily fantasy sports has made up the largest segment of its business, and since its launch, they have monetized their DFS offering by facilitating peer-to-peer play whereby users compete against each other for prize money. They additionally offer a sportsbook which involves a user placing a bet by wagering money on an event at some fixed odds known as a proposition determined by Draftkings. And the third major component of their business to consumer side would be iGaming, their online casino offering, including offerings such as blackjack, roulette, and slots. Additionally, Draftkings does make money from both advertising and sponsorships from selling things such as ad placements on their website. And on the business-to-business side, which only started in 2020, Draftkings, operating as SB Tech, supplies business-to-business sports betting and iGaming services globally for various gaming operators, resellers, and government-run lotteries in exchange for a share of the operator's revenues as well as some fixed fees. And just to make light of it, Draftkings possesses an impressive intellectual property portfolio including forms of software code, patented technology, and trade secrets. Now, in terms of a tech company, it's easy to understand what Draftkings actually does, but how well does their management turn it into a profit? Starting with revenues, we see in 2018, Draftkings reported an impressive $226 million in revenue, growing 50% roughly to about $323 million in 2019, before nearly doubling in 2020 to over $600 million in revenue. Next, we turn to their gross profits, and we see that in 2018, Draftkings reported a gross profit of over $177 million, growing to over $220 million in 2019, before increasing further to $267 million in 2020. Draftkings additionally provides us with a unique statistic in which they call it their average monthly unique players, or MUPs. And in this same time period, we see the average monthly unique players start with 601,000 in 2018 before progressing to over 650,000 in 2019 and almost all the way to 900,000 last year in 2020. Draftkings provides the revenue generated per MUP, and that also saw a subsequent increase over the years as well, starting at just about $31 per player in 2018, progressing to $39 in 2019 to over $50 last year in 2020. And we saw this continued growth pattern in their latest earnings report released May 7th, 2021, as they posted strong revenues of $312 million in just the quarter, with their MUPs reaching over 1.5 million players who averaged about $61 a month in revenue for Draftkings, driving gross margins to an impressive 42%. Now let's just quickly pivot to see who the top holders are institutionally of Draftkings stock. The first thing we notice is that the top holder is Vanguard Group with almost 6% of outstanding shares. T. Rowe Price is the second largest holder at almost 5%. Rain Capital owns almost 4.2%. Wellington Management Group owns over 3.5%. And the Capital Research Global Investors Group comes out at over 3% as well, for total institutional ownership coming out to over 55%. Though, as always, we should note that that doesn't really mean a whole lot on its own, and we don't know what price that they got in at. But what we can do is use a little SWOT analysis to measure the strengths, weaknesses, opportunities, and threats that we face as a potential investor into DraftKings. In the way of strengths, DraftKings is a trusted brand in online gambling. They have a large daily fantasy user base, and they already post strong revenues and growth. In the way of weaknesses, they don't have a positive net income yet. They are currently an entirely digital platform, which may or may not hurt them. And currently, the daily fantasy sports industry has been susceptible to some legal liabilities. But I don't think you should let these weaknesses necessarily overshadow the opportunities that DraftKings provides. To name the first one simply, they have a single wallet across all of their products for simplicity's sake on the customer. There are many opportunities that I see for vertical integration utilizing SB Tech, the business-to-business component, and any additional states that legalize online sports betting or iGaming opportunities undoubtedly would be beneficial towards DraftKings. But also, let us be wary of the potential threats, including both future regulation and potential inflation in our current environment. Online sports betting and iGaming could actually reverse course, and frankly, DraftKings faces intense competition. So now that brings us to our conclusion, and my favorite part, my position and my take. My position, full disclosure, no position. DraftKings, I think, may present potential investors with a high-risk, high-reward scenario. On the one hand, DraftKings is an emerging tech company that appears to be disrupting their industry, posting strong growth percentiles and ever-increasing revenues. On the other hand, though, you have a company that more or less acts as a digital casino in the digital age, and they could very well have to deal with the headaches in the way of legislation. Previously, DraftKings has been included in an interesting DFS insider trading scandal, not stock related, as well as being blocked by states' attorneys who did not constitute online gambling in their state. However, there are a few more points that I didn't really get to that I think I should at least highlight briefly. DraftKings has an extensive marketing campaign, and they've been expanding it even further. They are rolling out a brand new program called DraftKings Social to increase community engagement and their monthly unique player count, and they just recently entered both Michigan and Virginia for online sports betting operations. DraftKings just followed up Q4 with its best performance yet, though it typically has its strongest performance in Q4 where the NBA and NFL overlap. However, growth and losses are expected to grow throughout the rest of this year and all of 2022. Online sports betting is legal in states representing just 27% of the population, and iGaming stands at only 11% of the population. Should states lift the limitations, I would expect that the total addressable market for DraftKings to absolutely explode. But guys, just as one final reminder, I am an individual investor. I am not a financial advisor. This should not be considered financial advice. My name is Dave, and this has been The Market.